What's up, boys and girls? Old Uncle 2 back with you once again. Got another silver video for you today. Let's not hesitate, getting right into it. So it's been about 3 months since my last update. If you want to check that out, it was posted in December. I'll put the link in the description. Go ahead and give it a watch. But to recap that video, we are bullish long term here. Let's say in the next couple years, maybe a year or so, on silver. Why? If we get out here all the way on the 3-day, what we see here is an impulsive move that capped around about, that was our $30 high in a contextual location that we would not expect to see a wave C in. So if this is not a wave C, it can only then be an A or a 1. And in either case, we get a 2 or a B after that, and then a 3 or a C. So we at least expect to get another impulsive wave of similar magnitude at the lower end of the expectation. And of course, if it's a wave 3, we expect it to be extended. So long-term bullish. And this is the count that we've had. The low, of course, went in back here. We could, of course, go down lower to finish this to wave 2 or /B. But the expectation is that we're in there. We made a retracement greater than 618, the length of the proposed wave 1. So we'd say it's probably relatively good low. We have a nice 3-swing move into it. But since our last update, we've had a little bit of chicanery. Let's go ahead and zoom in real quick and take a look at it. Okay, down here on the 4-hour, in our last video, I was calling for a local top to be being put in at the time of the video. We were probably back around here at the time. We were short of this algo target. I said I wouldn't be surprised to see us go up, meet that, top of the channel, all of that good stuff before we retrace. At the time, based on our wave relationships, being that, let's just check this, 175, 1618, that. Our wave relation, the expectation of the wave, proposed wave 1 to the wave 3 being 1618, we were expecting it to be a wave 3 as opposed to a C. Let's go ahead and throw the labels on this for you real quick. We were expecting it to be a 1, 2, 3, 4, 5 going on up. And I warned you, of course, at the time that if we go down and take out this wave 1, which was a distinct possibility due to the magnitude of that 1 relative to the 3, even though it was made it to the 1618, it was a really big 1, that then it could throw a monkey wrench into the plans. But maybe, maybe not. So just again, to recap on this, we do think that this is, the expectation is that this is a expanding diagonal. Drawn something like that. It's kind of ugly, but like this. Again, a bit ugly, but that's the expectation here, and that holds true to now. And then of course an impulse out of that we got a nice distribution pattern at the top before getting this deep drop. So we can go ahead and kill this measured move as it is no longer in play. And since this is no longer an impulse to, what could it be? Well, the expectations are that we could either have a 1, 2, drop these over here, 1, 2 in play, drop these over here, reduce the size, change the color, or you have an ABC zigzag to the upside, finishing here. Oh my goodness. And if you have that, let's go ahead and make similar magnitude, primary, I think we are. Okay. Then 2, oh, the 2 is not done. Oh, that's true, but it doesn't necessarily mean we go much further down here, because let's think about that. So in the expectation that this were to be a zigzag to the upside, I propose that we still have room to the upside, and we see here that we obviously have an impulsive move going in. But I think both of these counts are still firm in play. 1, 2, 1, 2, or 1, 2, 3, ABC zigzag, X, and then put up another similar magnitude ABC zigzag to the upside. After which, we will then, of course, retrace all of that and then probably bottom out around our previous lows. So we do have a bullish and a bearish expectation, say longer term. However, in the near term, I think both the bull and bear case are going well with one another. Of course, there's always the potential that this is just an end pulse down and we're putting in a 2B up to the upside. But to be honest, there it really looks more like a distribution pattern into a corrective that finishes here. We're a bit murky on this lower expectation, as this is quite the sharp move down, right? It's a sharp corrective if it is corrective. But of course, this move is also very sharp, and I would say that this seems to be the more likely impulsive move, in my opinion. Meaning that the 1-2-1-2 has a bit of an edge. One thing to consider about the 1-2-1-2, however, is that that's why I have this channel drawn, is that the expectation typically is that you would not break out of the base channel of the first 1-2. Basically, of this move, we wouldn't break this line in the second 1-2. Typically, if that were to happen, you would say, okay, it was probably a zigzag and we're going in a move that is something other than 1-2-1-2. Still could be an X, right? But we do have a very sort of atypical pattern here, the way it's shaped out. So I don't put a ton of stock into that. Typically, I would just go ahead and take this 1-2-1-2 right off the table, not even look at it. But because of the context of the situation, that doesn't bother me as much. So I think I lean just ever so slightly 1-2-1-2, just because of, again, the fully adequate retracement we've had to this point, to this 618 of the larger move, and all that goes along with that. Now, we're not going to rule out the double zigzag, right? So this would end up being, in that case, a WX, and then we would put, like I say, a similar magnitude. It'd be off the screen. I don't want to draw that. Bring that up to cycle. It's so weird that this is a bigger, man, trading view. This is a bigger degree. It's just way smaller than these. Anyway, if we zoom back out to the 1 day, we see that we have not broken out of this base channel of the first, say, 3 swing move, right? So we can go ahead and clean this up a little bit. This is why I hate using these big labels. But basically, were this to be a X, right, a corrective to the upside, so a connector wave, right? So if this is corrective, which it very well may be as we show, that would insinuate that this were a W, and then we're going to go up for an X and then a Y. Now, going up even higher, change colors once again. If that were the case, you would, and we have a nice typical expected 3-wave to the downside. So the base channeling guidelines are a little bit better here for me. Contextually, like them very much. And in that case, you would expect the X wave, this wave, WXY, to at least in a multiple zigzag, which this isn't even a zigzag to this level, to break out of that base channel. In fact, this is a flat to this level, so you would expect it to retrace at least 90% of the previous wave. So we really haven't met any sort of typical expectation for a connector wave to the upside, giving us strong credence to that WXY I was talking about, right? Because if we were to measure this, WXY, throw the 1-to-1 on it, that would throw us up into that neighborhood of that 90%, maybe fall just a bit short. Really, I like to say, I don't know why I have it 886. It's, there we go, 887. I like to use the fib. If it gets to 887, so the 1-to-1's right below there. But really, if it made it to that 1-to-1, I'd be completely happy with calling that the X, potential X of a sideways. And that would just mean that, you know, so we'd go up to here, WXY, and this would be a WXY that would finish something more like this. Sideways, and then that's your 2, and then you would just rotate this white 2 over. Okay, so even in a bearish scenario, we have a potential of, you know, say, let's say minimum of going up another, I would say 22 to 26% minimum. And of course, we wouldn't think that another 32 to 36 is outside of the realm of expectation, right? X can easily go up and create a new high. Not a problem at all. But you would think it would stay in this area, but you get up to even 34, maybe even 36, but I wouldn't say much past 36. We would think that that's a corrective move to the upside. So it's very nice when the bull and the bear sort of align. If we go back down here on the 4 hour, we see that this is impulsive. It's a bit tough to read. Where are we in the process? Oh, you could say it's a zigzag too. Yeah, but I don't necessarily know that I sign on to that. This to me seems like an impulse. Maybe even a leading diagonal, impulsive leading diagonal. 1, 2, 3, 4, 5 potentially. I don't know if that would work. No, it wouldn't, because this is too long. So, basically I would say that maybe it's probably more like 1, 2, 3, and we're putting in a final 5th advance. Probably, getting close to a topish. We got the divert, just like the last video. I said we're getting close to a top where we would probably retrace. And I think that this time we'll have the last time we were, let's say the bullish expectation was a wave 4. If you know me, I'm not a big wave 4 trade guy. This time we'll have what I would expect to be a wave 2 or a wave B. You could say that you have a zigzag to here. I wouldn't think so. Even if it were that we were going to put in a zigzag, I would want to see 3 down and then another move up. So really the key here is going to be look for this 3 down. Look for a nice 3-wave down. And of course, with the members, we're going to keep you laced up on that as usual. We post updates to them all the time. YouTube, probably be another few months before you see this again. But we'll be looking for this as a potential trade opportunity. And, whether you use it to add to bags, whatever it is that you do with it, this is definitely something that we're going to highlight. Look at that confluence already setting up. But first and foremost, it's going to have to finish going up and then begin the retrace. We're not trying to time that for a short. I don't find that to be particularly advantageous in this particular instance. But yeah, long-term silver bull. Even if we go up here, this could take years to play out, right? So even if we go all the way up here and then all the way back down, it could be a pain in the ass. Not saying it's a good investment, but eventually this plays out for the good, in a much bigger, at least similar magnitude wave to this, right? So that's at least your $60 or $100, something like that. I don't know. But in the midterm, next few months, I would think that this area is sort of on the table. Now, this could all fall to pieces. We got to get out of this down channel that we've been trapped in so far. But assuming it doesn't all fall to pieces, it's all going according to plan. I would say bullish on a nice 3-wave retracement. Take the long silver squeeze. Let's go, baby. Make sure to like and comment if you're into it.